Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, probably going to be a shorter video today. I was going to do a longer one, but I think I'll save that for tomorrow. It's getting kind of late here. It's been a long weekend, but I did want to at least provide a brief update. It's been a while, I guess, since we talked just about the bull market support band. So, as of this week, right, as of September 9th, which is the week we're about to start here, the 20-week SMA is now at around 62.5K. 21-week EMA is just north of $60,000. And this is one of those things where, it's good to respect it in either direction, right? Whether it's holding as support, or like it's done these times right here, or holding as resistance. And it is true that last year, around the same time, Bitcoin fell below the bull market support band. And then by about late September, it actually started to get back above it. And then it went on its merry way to ultimately go to new all time highs. So I don't want to lose sight of that, right? I don't want to lose sight of that. With that said, this pattern has been slightly different, right? Over here last year, we saw a series of higher lows and higher highs going into that next move. This has been a series of lower lows and lower highs. Now, what's interesting is 6 months ago, when gold was breaking out and USDT dominance hit its trend line, and also the risk metric was in the zero point 0.7 to zero point 0.8 risk band, I said back then that rather than have a major peak occur, this summer or even Q4 of this year, what happens if the market just cools off for 6 to 9 months, right? Remember that, 6 to 9 months. And you may say, well, why, right? Why 6 to 9 months? Well, interestingly, if you look at the ROI from the low, and you look at Bitcoin, it's right where it's always been at this point in the cycle. So it took about 6 months for Bitcoin's market cycle ROI to get back in line with where it was with the last two cycles at this point in the cycle, right? Counterpoint, of course, if you measure it from the peak, it's still ahead of where it was last two cycles. If you measure it from April, it's behind, right? But I mean, I think I think it makes sense just measure it from November. Measure it from the actual top, right? Not the top that the indicators say was the top, but the actual top. At the end of the day, indicators, all models are wrong, some are useful, but price action is ultimately king. So 6 to 9 months was the argument, right? 6 to 9 months. And it's been 6 months, right? I mean, this has been 25 weeks. Now, the reason why I'm bringing this up, okay? 6 months ago, when I said to expect a 6 month bleed, at the very least, right? Minimum 6 month bleed to about September before the market picks back up again. The reason why I said that was because in 2019, when gold broke out, that's exactly what Bitcoin did. It dropped for 25 weeks. And then it picked back up. And then we had a hard landing. And we just finished week 25, right? So what's funny, absolutely fascinating to me is that all the people, so maybe not all of them, but so many of the people that were laughing at the idea of lower highs for at least 6 months, so many of those people that were laughing at it back in March and sort of mocking the comparisons that I've made on here to 2019 with rate cuts coming, now they're jumping in on the 2019 bandwagon. When back over here, they were unwilling to, because they couldn't believe that it was at all remotely possible they could play out like 2019. Why? Because it was a halving year, right? And all they knew is that Bitcoin goes up in the halving year. But monetary policy also plays a role. And now what's funny is now I see a lot of people that once upon a time dismissed the 2019 view. Now they're coming out and saying, "Oh, well, look what happened in 2019, right? Where it bled for 25 weeks and then it took out that lower high structure, right?" It's fascinating. But the first thing I think of, right? The first thing I think of when I start seeing all this stuff is if everyone believes it, then Bitcoin's probably going to do something else, is my guess. That's just my guess, right? When no one believed it, right? When no one believed the 2019 comparison back in March, it made more sense for it to play out because so many people denied it, right? And it was actually those people that were so convinced is what led to these pretty impressive rallies back up where Bitcoin ended up tagging, its trend line. So the first thing I think of is, okay, well, now that everyone is pointing out this 2019 comparison, perhaps it's time for the 2019 comparison to change, right? And it could change in two ways, right? One way is that you don't get a hard landing, and so everyone, sort of looking for that ends up being disappointed. But another way for it to play out would be, and again, that could mean, it could mean that it breaks the lower high structure and then does something else different from what it did in 2019 and early 2020. But another thing, I just want to put it on your radar. I'm not going to go on and on about it. I'll do another video probably tomorrow or the next day where we spend more time talking about it. But I just want to put this on your radar. I want to put it on your radar. Last cycle, when Bitcoin broke the lower high structure, right? When it finally broke the lower high structure, it took about 6 months. Now, I said lower highs and lower lows for at least 6 months. Now, it's been 6 months. But I also said it could take longer. Will it take longer? I don't know yet, but I just want to remind people that last cycle, if we remember, last cycle, the lower high structure was not achieved until after 75 basis points of rate cuts, right? And that was 75. Yes, I draw the fives from the bottom. That'll be the news story for today. Out of 250, right? 250. This time, right? This time, the Fed funds rate, 550, right? 550 basis points. But we haven't had any rate cuts yet. So then I wonder, everyone's looking at the 2019 comparison now because, well, now it makes sense for them because now that means the lower highs break. And they could be right? I mean, again, that was what I said 6 months ago. But I also, need to look at the market and say, look, I said at least 6 months. It's been 6 months. It could be time. But if you want to look at the market in a different perspective, right, and say, well, there also haven't been any rate cuts yet. And last cycle, the lower high structure wasn't even broken until after 75 basis points of rate cuts when the Fed funds rate was only 250 basis points. Now we've had 0 rate cuts. We're probably going to get one in a couple of weeks. And the Fed funds rate's 550. So what if the lower highs are not about to break? Again, I'm a student of the market. I'm fine if they do. Hope for the best, plan for the worst, right? So let's just think about this for a second. And I did a video on this the other day, the hard landing versus soft landing versus sort of the no landing. The no landing basically is that it just picks up here and the bull case is valid. But let's just suppose for a second that this is a function of monetary policy and you need some rate cuts for Bitcoin to break the lower high structure, okay? Then it could just drag on for a little while longer, right? I mean, the downtrend could take longer. And I mean, even back then I said 6 to 9 months, right? So even if it took 3 more months, it's not like it'd be that out of the ordinary. It's possible for it to just keep on dragging on until we get sufficiently looser monetary policy. So I just want to put that on your radar. Again, I'm going to do a longer video tomorrow or the next day about it. But I just want to put it on your radar. In the meantime, it doesn't mean, right? I mean, it certainly doesn't mean that Bitcoin can't revisit the 20-week estimate at some point. But one thing I go back to, and then I'll probably leave it at that, is that in the last cycle, the uptrend took about 28 weeks. And then the downtrend The soft landing downtrend took about the same amount of time, right? About 25 weeks, but about the same. The uptrend this time took 68 weeks. Now, the downtrend for the soft landing did not take the same exact amount of time, but you can see again that it's only been, we're now in week 26, right? It hasn't been, the downtrend is not reflective of the length of the uptrend, whereas here the downtrend length was reflective of the uptrend length. And so I don't know, right? I really don't know if that matters, if the time component matters, if the rate cuts here, if that matters or not. The other thing to consider, just briefly, is the balance sheet of the Fed. We know last cycle that it was actually after QE began that the lower high structure was broken. And first of all, when QE began, Bitcoin actually fell. We haven't even reached the point yet, right? We haven't even reached the point yet where QE has begun. And the reason why that might be the case is because the Fed hasn't been worried enough yet for QE to begin. And if they are willing to start up QE, then it must mean something's probably wrong. And that's why risk assets could do poorly shortly after QE begins, if that's the case. Kind of like Bitcoin did in 2019. So you have to wonder, right? You have to wonder. And again, like, I know there's all these people saying, well, it's the halving year. But again, guys, 6 months ago, where were you then on the lower highs? Where were they then? I just wonder, right? I wonder. And so I would say I would try to keep an open mind here. Either way, it's going to be easy. I think it would be fairly easy to sort of validate this if in a few weeks, if Bitcoin breaks the lower high structure, then it could look very similar to what happened back over here. But if it doesn't, right? If a month from now or 2 months from now we're still looking at this and we're like, why hasn't Bitcoin broken the lower high structure, right? As it did over here. The reason, if that's what happens, right? The reason could simply just be because we haven't had a sufficiently looser monetary policy, right? We haven't had QE. We haven't had enough rate cuts. That could be the reason. So I just want to put that on your radar. In the meantime, if Bitcoin, let's just pull up some of these key levels that we've looked at previously. The 50-day, the 200-day. You also have the 100-day in there. They're all in this sort of this band up here. The 200-day is now at around 64K, almost 64K. The 50-day is at around 60K. The 100-day is at around 62K. And again, the bull market support band is basically right there with them. So your main area of resistance for Bitcoin is between 60 to 64K, right? That's going to be your main resistance area. So if on a bounce, Bitcoin rallies back up there but can't break through it and it just continues to lower high structure into October, then I think you'll probably know why, right? You'll have your answer. If in October, November, Bitcoin still has not broken the lower high structure and you're searching for an answer, then it could just simply be the Fed has not yet gone to sufficiently looser monetary policy. If it has broken through, then you might argue that the neutral rate is much higher than the Fed thinks. I don't tend to agree with that. I mean, I think if you just look at the labor market, you can tell that the labor market is starting to soften up, and it's only a matter of time before that continues to spread, especially if the Fed doesn't pivot. But look, they're going to pivot in a couple weeks. We'll see what happens with the market. So I just wanted to sort of get that on your radar. Okay, get that on your radar about monetary policy and how it could affect the lower high structure. And really the bull market support band is going to be the main area of resistance for Bitcoin. If Bitcoin can get above that, right? If it can get above that, then it still has to break the lower high structure, which is not going to be broken until north of 68, even maybe 69K, right? I mean, you're even as high as the low 70s potentially. 69, right? $69,000 is where Bitcoin would need to be just to be back at the lower high structure. So we need to go above that to break through. So 70K, right? Because the last high was at $70,040. And I remember that. I mean, I remember that, and I remember telling people back when it was at 70K that this is exactly what happened in 2019, and it still went on to put in one low, one more lower low, and then Bitcoin did that, and then if it's a hard landing, it would put in another lower low after that. But again, if, student of the market, I don't know. I don't know if it's gonna play out the same way as 2019, where it sort of bottoms out here and then starts to go back up and break the lower high structure, or potentially if monetary policy is gonna play a critical role. And based on what Bitcoin dominance has done this year, when normally, I can't believe I'm still talking. Normally, if you look at dominance, excluding or sorry, what am I doing? Go to year-to-date ROI. If you look at year-to-date ROI of Bitcoin dominance without stables, and you just simply look at 2016, 2020, you have every reason to believe that Bitcoin dominance was going to go down this year, right? I mean, you can understand why some people were in that camp, right? They're like, well, it's halving year. Bitcoin dominance normally goes down in the halving year. What were they missing, right? Monetary policy. Monetary policy would have told them that, like 2019, Bitcoin dominance just went up. This is 2019. Look at 2024. Bitcoin dominance has just been steadily going higher. Now, it hasn't been going as high. One of the reasons, of course, is because of the introduction of a larger component of the stablecoin market, taking up some of that market share. But 2024 looks a lot more similar to 2019 than it does 2016 and 2020. So we know monetary policy is important. If it weren't, dominance would have gone down this year. But it went up. It's gone up, suggesting the monetary policy plays a role. And so because of that suggestion, right? Because of that suggestion, then you have to at least wonder, could that remain intact until after QE and until we've had at least a few rate cuts. Okay? So keep it in mind. And we will see what happens, right? We'll see what happens in the next couple of months and see definitively once and for all how important that monetary policy is on sort of helping us identify exactly where Bitcoin's going to go. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.